Yo, everybody, welcome to another weekly market review session. Okay, let's get straight into it, everybody. So, as usual, this is our financial disclaimer. This is not financial advice. This is just our own personal views or opinion that we may set out on our social media. Okay, so let's check out the charts, everybody. How to tackle the month of August. So, we got a new month coming up. How do we tackle it? How do we position ourselves for trading, for investing? I'm going to cover all of that in today's weekly market review. Okay, so let's take a look at the charts. Okay, so we are on the S&P 500. Number one, we are looking at my hourly chart. Okay, my hourly chart over here showing me some interesting stuff with the markets last week. What happened? Number one, I want to let you guys know that you can see markets have been rallying, okay, from May all the way till now. They've just been going up and up and up, okay, very nicely in a uptrend, okay. Now, in my opinion, like I've been saying in my previous video and this video, the markets are still overextended, and I think this is the month where we will see the correction and pullback happen. Okay, so why do I say this? It's very simple. Number one, last week, okay, if I just zoom in a bit and circle this area here, you can see volatility coming into the markets. Now, why do I say this? Number one, very, very clear sign there is a gap up over here. All right, so a gap over here. Okay, price jumped, but what happened on that next day? Okay, so this was the previous day. The next day, what happened? The market ended up going down very heavily. Okay, so this is a very clear sign that there is volatility coming into the markets. Okay, and if you look at these candles on my hourly, pretty big candles for this drop. Okay, now number two. All right, number two, if I look at my S&P 500 seasonality, okay, you can see very clearly the month of August. Okay, the month of August, with importance being on the first part of the month, it does drop. All right, it does drop and goes sideways based on seasonality. So for the start of August, okay, maybe this week and the next following week as well, do expect the choppiness and do expect the markets to start its pullback. Okay, I think it's only a matter of time, but the pullback is definitely about to come. Now, am I expecting the markets to drop drastically? The answer is no. Okay, I'm not expecting the markets to just suddenly, be crazy and start to go down and form a new bear market. Okay, that's not going to happen, but it needs to have a healthy pullback and correction. Okay, so how does that look like? Very simply, we're going to go on my daily chart on S&P 500. Okay, daily chart on my S&P 500. I'm going to put in my 50, 100, and 200 MA. And you can see very clearly over here, like I keep mentioning, we are overextended. Even seasonality is showing you that the month of August is a pullback month. And we need to have a stronger pullback in the market. So right now, I feel the market is neither here nor there. Is it going to be a bear market and just drop? No. Okay, where do I see it going? Number one, typical pullback or correction is about 5 to 10%, guys. All right, about 5 to 10%. So if I take my ruler over here and I measure 5%, okay, you're looking around this level, which is your 434 level, which you can see very clearly is around my 50 MA level. Okay, so again, if you see where the stock or where the market pulled back over here in the earlier months, it was always to the 50 MA. So a healthy pullback will definitely be to the 50 MA, and you're looking at about 5% drop. Okay, so 5% drop, like I mentioned, is going to be around my 50 MA area for yourself, right? So around the 434 to 436 level. Now, number two, like I already showed you, seasonality is already showing us that August is a more bearish to choppy month. The third thing I want to show all of you is that if you look on the daily chart over here and you focus on this particular candle, okay, why am I pointing here? Because this candle, if you look very carefully, it is an outside bar, okay, and it's also a bearish engulfing candle. Okay, so if you compare and look to the previous candle over here, we opened higher. Okay, so we opened higher and then we close lower for ourselves, right? We open higher, we close lower. So you can see we opened over here, close down here. Okay, so big difference, okay, from the previous day. We open higher, we close lower. So again, outside bar and a bearish engulfing candle that I'm seeing. So typically what is a bearish engulfing signal? It is that there is a trend reversal and likely for it to pull back down. Okay. Now, where is the other times where there was an outside bar for S&P 500? Okay. So number one, if I go back a bit further, okay. If I go back a bit further, you can see over here on this candle, this red candle over here is the outside bar as well. And when this same candle that happened over here took place, we had the markets pulling back down heavily for the next couple of days. Okay. Now, you don't even have to go back that much further. Then previous outside bar was this candle over here. You can see market went back up slightly before it went down subsequently for the remainder of the days. Okay. So that is why another signal for me that the markets are going to start pulling back. This outside bar, currently it's outside bar and bearish engulfing candle coupled together. This is my third reason on why I think the markets should start coming down for itself. Okay. And lastly, if we go on my VIX seasonality for the month or the historical months from 1990s until now, 2023, you can see, like I mentioned in my previous video, the second half of the year is when the volatility kicks in and the markets become more volatile. And that is usually due to markets correcting itself or choppiness and pullbacks. All right. Now, lastly, if we go and look at the fear and greed index, everybody, fear and greed index, you can see markets are extreme greed for the past 2 months and it's already been going down slightly. Okay, it's no more all the way at the extreme end. It's already going down slightly and it should continue to go down to the greed levels as well. Okay, this definitely will not maintain for the subsequent months. Okay, so a lot of factors that are pointing towards a pullback and that's how it's going to be. Now, how do you approach your investing and trading for the month? Very simple. For the past 2 months for myself, I have not been investing or loading up on shares for any stocks and even the S&P 500. Even the indexes as well, my NASDAQ, I have not been loading up on any shares simply because I feel markets are too extended. But this month, once the healthy pullback happens, then I will load in because I don't want to increase my average price too much or too high. So I'm going to wait for that 5 to 10% pullback before I load up anymore. All right. So in the meantime, my money is just sitting there. I'm not dollar cost averaging into any stocks. I'm going to wait for that pullback to happen before I go into any shares. Okay. Now, if you look carefully as well, guys, there's also a gap over here. So likely when S&P 500 pulls back, it is definitely going to come down and close this gap over here too. Okay. So again, all signs pointing to a pullback. Just be patient. Okay, it's definitely coming. For those of you who are looking to invest, please stay on the sidelines, wait for the pullback to happen to around 50 MA. Like I say, 434 to 436, then you can start going in. Okay. That's how I would approach the investing if you're doing any shares or looking to buy any shares for the long term. Now, for trading purpose, I would not look to go into any long positions. I'll be very, very careful on doing long positions. Even shorting the market, I wouldn't look to short the market because we are back in a bull market. There's no need for you to go and short the market. I would rather, number one, if you're trading, stick to day trading. Day trading is going to be a lot easier. You take each day as the market goes and it comes. So you don't have to worry about the fluctuations for the week. Second thing is that if you're doing swing trades primarily, just sit out of the market, wait for that pullback to happen, and then go in with more confirmation and more definition. Okay, so that's how I will approach your trading for the week. Okay, so for the month of August, again, looking like it may be a month of pullback. Just be a bit more patient, everybody. Let the market do its thing, and then once we have clear signs, go in for your stocks and for your respective trades. Okay, so that's how I'm looking at for the month of August. Now, lastly, Forex Factory. Okay, Forex Factory, what are the events that I have that I'm looking out for? Again, this week, don't really have critical events like FOMC or interest rate hikes, which is great. That means the market has a lot more potential to move. If you're doing day trading, just take note of Tuesday. There is a high impact event. It might cause some fluctuations. Wednesday, there's non-farm employment change. Thursday, there's unemployment claim. This is before market opens. Wednesday one is also before market opens. And then lastly, Friday, you have non-farm employment change and unemployment rate. Okay, this one again before market opens. But nothing too crazy like FOMC or interest rate hikes to really shake up the markets. So I think this week markets may have more movement, more price action for itself. Okay, so look out for what I mentioned, look out for those key levels and take your trading according for that week. Okay, so with that, I've got nothing else, guys. Just follow what I mentioned in this video. Stay safe if you're trading. Approach the markets carefully. May the markets be in your favor. Take care, stay safe, and I will see you next week.